Hey everybody, Julian Marchese here. It is August 4th, Sunday, 2013, and in this video I'm going to give you guys a market update and basically run down all the positions I currently have on, give a little reasoning why I'm in these trades, show you my theses and themes, market themes behind those trades, and basically how I'm looking to manage them. So right now I've basically got a full portfolio. I'm fully positioned. In basically three major themes at this point. Two of them being directional, the other being a hedge. So I'll go through all of them. The first one is basically an emerging market slash China play. I have a large short in the Chinese ETF, basically the FXI, as that's really the only way to play it in the U.S. markets, or at least through a liquid market. So the reasoning behind this trade is really simple. Basically, Chinese growth is slowing, and there are a lot of expectations. Well, there's actually a lot of debate from the positive side to the negative side, and since there's actually a lot of debate there, I prefer to take the trade with the trend. And as you can see, China has been underperforming really uh, basically since the start of the year. If you compare basically the S&P to China, right here, this chart basically shows it. So since the start of the year, which is basically bang right there, you could see how much the S&P, or rather U.S. stocks, has outperformed. And I think this is going to continue. Recent Chinese economic data has been a little bearish and at best mixed. So, that picture hasn't really changed, but we haven't seen much reaction yet in at least, let's say, the spread. So I'm waiting for this to happen. I do have a calendar spread on to just take some, intermittent profits as the market just stagnates around this level. But I really do not want to see it this ETF above 35.5. I think we're nearing the top, or at least the top of this pullback in the Chinese market. So I'm really looking to see it decline. And a lot of intermarket relationships have been showing this, as you can see in copper, which I'm also short. This is part of the Chinese trade. You can see it's been stagnant, but still a downside uh, downside bias. And obviously, China consumes a huge amount of copper, so the two markets are very correlated. And same picture here, you can see copper has been underperforming since the start of the year. Copper is really nearing an important level from a technical basis. If we see above 32 half, or $3.25 rather, I'm going to be seriously reconsidering this trade. I think we need to hold basically right around here, and we need to see some further action. I really think copper is going below that $3 level in the next month or so. And if we get below there, let's take a look at the weekly. There is that's a huge level. Once that breaks, it could get really ugly, and we could easily see, say, two half, 275, and around that range very quickly. So that could be a very big trade once it starts going. But we may see some heat. It may get above that 325, in which I'll have to reevaluate and wait for another entry to the downside. Then the other leg of this trade is the Australian dollar. And this has been my best performing trade and one of my biggest trades actually. I'm basically short from around 92 half or so. So I got a really good price on it on this pullback, and it continues to get hit. We are still seeing lots of econ data come out with regards to the Australian dollar. And as I pull it up here, actually I put my calendar up here. We've got some data out at least tonight, also tomorrow. And then we have the RBA rate statement on Tuesday. Well, Tuesday early morning, so really tomorrow night. I'll probably stay up and watch that. Market's expecting a cut in rates there. If that doesn't happen, we may see a large bounce, and I may want to cut my profits there and wait for bounce to re-enter. But basically, we're expecting a rate cut, and if we see that rate cut, we probably will see a little bit more downside. But the tail risk is actually really to the upside, so I may consider taking some profits, looking to re-enter on a bounce. That might be the most prudent move. So that's basically the China thesis of the Australian dollar, copper, and China, and that all really ties into an emerging market thesis as well. Then I have my dollar long thesis, which also ties in a little bit to the bond market. So I should first start there. Rates are currently sitting at, this is the 10-year, rates are currently sitting at 2.6. We've seen a lot of volatility in the last few days due to jobs reports, just some other, dollar action and good positive econ reports. Basically, the data in the U.S. has been mixed over the last week, especially with the non-farm payrolls missed. So basically, rates have been mixed. Rates have been moving very closely with the U.S. economy econ data. So if the economy is doing a little bit better, if the reports are beating, you're going to see higher rates. So I don't think I think that the Fed in a way has lost control of rates, and that the last meeting, Bernanke didn't say anything different. He basically rectified, or rather reiterated what they were saying previously before the whole taper mess up that we saw. And the market didn't come back. Rates still kept steady above that 2.5 level, and that's telling me that the market is comfortable with higher rates. Now, that basically means that the tail is still to the upside in rates. If we keep seeing better economic data, we can push much higher in rates and much lower in the bond market. What does that entail? That entails higher rates, which should provide a bid to the U.S. dollar. The higher rates on your currency, the more attractive it is. So that would create some sort of support in the U.S. dollar, and then that would flow possibly into risk markets where you'll start to see at least some faulty action, some pullback in equities. But until then, I'm actually long equities, and that is my hedge, what I was talking about before. But basically, this thesis has me short the British pound versus the US dollar, short the yen versus the US dollar, so I'm long USD JPY. The Australian dollar trade also ties into this, as I'm short Aussie US. And I'm also short the bond market. So I think that we are going to see further downside action in the bond market, higher rates, and that should provide a bid to the US dollar at some point soon. It's really dependent over the next couple of days to see if the market will actually, watch this Friday's unemployment report, see if they really take it in, or it's been priced in. So either the market forgets about it and more good economic data comes out and the US dollar continues to rally from this potential base it's made, or we may see some further downside action where once again I'll have to reevaluate. But I've gotten some good prices on the bond trade, so I could easily hold on. I may look to add some more to it, as it is a big theme of mine. And another trade that kind of ties into it is my short gold thesis. I'm short gold from around 1300. Got short over here, got some heat, but and gold is the same thesis as before. With a better economic front in the U.S., or rather better economic data and a stronger dollar, that's bearish gold. Gold has lost its touch as a safe haven, no question. It scared a lot of people. So I think there's more downside to it. The trend is down. I'd rather go with it than try and fight it at this point. Learn my lesson from trying to do that. Yeah, I think we could see 1200 or at least a return down to 1250 if we are actually trying to make a base here. Lastly, my hedge theme is in basically U.S. equities. I'm long the U.S. equity market, as I think that the liquidity-driven trade will continue. This is the SP you're looking at. We're above 1700. I think we may see a final push. Nonetheless, Being long equities is a hedge of a lot of my other risk off trades. Um, and if I think that the US dollar is going to rally, stocks should come in. But if that doesn't happen, I got my hedge in, and I'll benefit from that, offset some of my losses elsewhere. So basically, that's my only hedge trade on at the moment. A lot of the other trades are correlated, intercorrelated at different times, and I have to monitor those correlations very closely. But right now, I'm basically a little bit hedged. So even though the jobs report missed on Friday, I didn't really get hit too hard as I am playing the dollar long mostly. That's basically my biggest trade. So I didn't get hit too hard as my other trades were um, differently correlated basically, and they offset a lot of losses in other markets. But currently, biggest loser is China, and the biggest winner is the Australian dollar. So both in the same thesis, or basically the same theme. So altogether, this theme is working out. I do think China could really get going if we could get below that recent support level. We are going to need to see some poorer economic data out, but I'll be looking to manage these positions closely. Alright, so thanks for watching this video, guys. Hope you enjoyed it, and happy trading.